A lot of people have been asking me about entries. They've been kind of struggling. I've seen a lot of people get frustrated on these lower time frame charts, even though for me, I think it's been pretty clear. Most people really struggle in pretty much every market condition. They'll say, oh, there's not any entries inside of here to make the runs higher, even though this was super clean, this is clean, the whole thing is clean. But people will always make an excuse for something instead of doing self-reflection and journaling properly, like how I taught. The real main thing that you have to prioritize whenever you're looking at any sort of price action is the very foundation of pretty much everything you're going to be doing inside of the market is power of three. Where is this weekly candlestick likely to expand to? How is it going to expand? So this weekly candlestick is obviously made up of 5 trading days. How is those 5 trading days going to affect the weekly candlestick? Where is the manipulation to buy the wick low? You want to be buying the wick low of weekly candlesticks, of any candlestick for that matter. That's the perfect entry, is to buy the wick low and to sell the wick high. Now, in order to do that, you have to create a framework around economic news calendars. You have to make a framework around weekly profiles. And a lot of people kind of struggle with that. So immediately going into today, it's pretty clear what price wants to do. It's Monday after the previous week has already made an expansion into the weekly objective. My objective right now is all-time highs, but this array on the daily chart, I look at things from a ladder perspective. So as price is climbing up higher and higher and higher, what's the next array that's going to support price inside of here? So for example, you have the breaker block here, which I don't know where my line just went. You have the breaker block. Before that, you have the inversion. Before that, you have this wick. And then down here, you have these inefficiencies here and here. So as price is utilizing these arrays to climb up higher, how is it going to do that? Well, this previous week candle already hit that objective. On top of that, it's a Monday, no news. So I'm not expecting price to make a large expansion. And I saw a lot of people try and take longs. Yeah, the high time frame may be bullish, and it may be extremely clear that it is bullish. But how are you going to create a framework around that weekly candlestick in order to say, okay, this day is high probability in order to move into my objective? So immediately going into open, I have a bunch of stuff on my chart. Immediately going into open, we're seeing these relative equal lows on top of the new week opening gap with its inefficiency from here to here is your liquidity void inside of it. So you have 2 main objectives here. You have a shallow run into sell side, which whenever you have a shallow run into liquidity, you're going to expect a second dig. Once it reaches that second dig here, where's the next area to target? This new week opening gap. And that's kind of one of my favorite type of trades. On a Monday, going into New York Open, new week opening gap has not fully been repriced. That's when I'm looking for entries into it. So just like the foundation for Cairo, all right, the algorithmic price delivery continuum. Every 15 minutes, you have a new 15-minute candle. Every 30 minutes, you have a new 30-minute. Every hour, you have a new hour. And utilizing that, especially going to open, I kind of use these arrays that are close to open, that haven't been traded into yet, as a foundation, or like I like to call it, a bias builder, going in and utilizing it. So from the trade this morning that I posted on my Twitter, we have that 30-minute, not the 15. I like the 30-minute. Algorithmic price delivery continuum. Now, as price trades up into that 30-minute, if you remember all the way back from my Cairo, here is not a market structure shift. This is not where price is bullish. This 30-minute array is negating the lower time frame market structure shift. So lower time frame market structure shifts are negated by a higher time frame PD array. And you're classifying that higher time frame PD array as a PD array or an inefficiency higher than the time frame you're currently on. So if I'm on the 1 minute and I see a 1 minute market structure shift and this BISI, I'm not looking for a long off of that. I'm looking for a run up here, which this entire leg creates the Judas swing, and then for a move lower into that sell side to create a deeper dig into new week opening gap. So on top of that, when we're going into open, we have our opening range gap from here to here, 0.29%. So that is also telling me that price has a high probability of being high resistance today. There's nothing with this opening range gap that's going to tell me it's strong or should be left as a breakaway gap. So 0.4% and under opening range gap is an indication of low probability price. Now, it's not always. Again, weekly profiles, what day should be expansion? If it's 0.4% to 0.8%, you can expect price to trade back into it, and you have the 70% likelihood of reaching 50% during the first 30 minutes, is your caveat. Now, I've noticed with the extra volatility that the market's had, I've sometimes, depending on it, had to go 0.9 or even all the way to 1% of moving it from this 0.8 to one of those, depending on the volatility. But what I like to do off of open is I've been gauging these candlesticks. So if the candlesticks are 0.25%, then obviously I know that it's going to be good price action. We're going to have a lot of volatility, so this lower probability for 0.4 is not going to be realistic. So you have to use everything together and not just use something as a pattern. The thing that separates a pattern is the narrative. A narrative being the reason why something should happen in price. I can't just go in and say, oh, look, inversion fair value gap, and then you take a loss here. And we'll go over this now. But really, kind of anything over 1% to 1.2% open range gap, I'm looking at that as a breakaway gap. I would only want to see the upper portion be traded into, and then have the draw on liquidity align it with it. So if I have a premium opening range gap where price opens up here and closes down here, and that difference creates the opening range gap, I would not want to see 50% of that gap be traded to. I want to have that left as a breakaway. Now, going into open, price trades up into that 30 minute, not the 15 here. Whenever I have multiple candlesticks working something like that, I never like that. I want price to act really clean, like this. This is when the fair value gaps look best. Is it just trades up into it and then it works away? How do you get a fair value gap like that? By utilizing the price delivery continuum. I know here to use the hourly, not this 30 minute. Because why is that not a market structure shift after the high time frame has been reached? We trade to the low of the daily SIBI, we trade into the new week opening gap and the liquidity void from that new week opening gap, and it trades up higher. But it trades into that higher time frame PD array, negates the lower time frame market structure shift by this higher time frame PD array, and then it works lower. That's your first stage Cairo right in here. So it's the same exact concept on this 1 minute chart. As price trades up, it fails to reach where? From this low, all the way to that high, it's failing to reach 50%. That's showing me weakness. That's showing me that we are not bullish here. And then where's the body close? All the way below the 30 minute. Now, We'll go into the entry in a sec, but before we go into the entry up here, we have to understand the narrative. So price action closes below that 30-minute, and right here opens with a small volume imbalance. Whenever I'm at the time that I'm expecting price to move in a certain direction, we're at the correct time, we're at 9:30 open after our objective is already reached, which is where I'm expecting it to go, right to down here. So when I have that and I see the volume imbalance, that's when I'm expecting speed. And that's exactly what it gives us. It gives us speed, price trades down. Now look at the candlesticks. Low, low, low. Deep dig, deeper dig. All of that is showing me that price is getting weaker inside of here. If it was vice versa, creating higher highs or higher lows inside of this opening range gap, then that would be more problematic for me. But instead, price trades lower, trades lower, trades lower, trades back up, drops all the way into new week opening gap. Now, trades up, inverses it here. I bet a lot of people got smoked on that trade. The reason for that is because it's not the time yet. Think back to the daily chart. You're not expecting Monday to be a large range expansion yet. You're combining that opening range gap and the narrative of the opening range gap to tell you that the price action is not going to be high probability. It's not time yet for price to make a large expansion. So as price is rallying up here and it leaves this first suspension block, it trades all the way back down into the rejection block, and then it starts moving up higher. How can you expect this one to do that? Because price is going to engineer liquidity right before that macro, trades into the rejection block, which aligns with that 50%. Then look at the bodies there. The lower octant right there is showing you that it's not time for it to go lower either. So when price closes above 50% here, if you were bearish, you would be out right there. Why? Because after you reclaim the first presented right here, that's being qualified by that lower quadrant, after that's reclaimed and we trade up into it at 946, it's either going to trade back up into it even shallower than this candle here at 946. Just like how this deeper dig, deeper dig, deeper dig shows weakness, you would expect price, if this was really going to reclaim to move lower, it would be trade up into it, show more weakness, and then quickly drop because you're heading into the macro. But what happens? 947 closes higher, opens with a volume balance, wicks down for an immediate rebalance into 50%, then it closes higher. Then you have this volume balance here. Now it's heading into the macro. Trades down, where? Right before that forms. As that volume balance opens, my eye is going to immediately jump into 50% of that, because that's wicking down into that suspension block, even though it hasn't closed yet. Price trades up. Now, it closes higher than this. The bodies are showing you strength at that moment. Price trades down. You'd want to see the opening range gap high be used as discount sensitivity here. This should be some form of strength. So it trades down, trades into the volume balance, trades up higher into that 30-minute, and right there. Now, that was my second trade from today, where Tradeify didn't let me execute it. They didn't let me take a screenshot of my executions, but right there. You all saw my executions from Twitter, selling this high and covering it right there. Top and bottom tick. So as this candlestick here is trading up higher from its open. It's trading up, it's trading up, it's trading up. On a 5-second chart, what does that look like? You have 931 right here. And then the close of it. So as this candle opens right here, and it wicks up higher, and it drops, and it trades up higher. So on the 1-minute chart, it's going like this. It's trading up, it's dropping down, closes to black, And then as soon as it trades back above that opening price, we return to an up close candle and it trades up higher there. That's the entry. That's the key right there to know, okay, we're not going higher. This closed lower. You can anticipate that as a turtle soup right here because you're not bullish. This first initial run up higher stalled. This is entering a form of compression inside of here like a spring. Within the first 10 seconds of that candlestick, I know that that's not going to continue higher. If it was going to do it, it would have already reached 50% there. So then that's where you get your high probability turtle soup from. Bang. Price drops lower, trades up, and your eye has to go to these candlesticks. Trades into 50% there, fails to reach consequential encroachment there. What's that show? Misses it by one tick, but that doesn't matter. That's still showing you weakness. Price trades lower, closes deep inside after closing above. Bearishness. And then you continue to break price down and break it down, and it reaches its objective. So everything that you do has to be form fit on the basis of, is this a continuation day or is it a reversal day? Am I expecting my trade to come from a continuation or from a reversal? I cannot use a continuation trade if I'm looking for a reversal. That would be completely asinine. That would make zero sense whatsoever. So knowing all of that in mind, where's the liquidity resting? I have this here, but that's a shallow run. Again, when you have a shallow run on liquidity, you expect the second dig, because that's not deep enough for smart money to pair their orders. Trades up, drops into new week opening gap from right here. That's the liquidity void, and that's where price reaches down into. Here. Then, what do you have? You have going up into that new hourly SIBI. Price delivery continuum. Here to here. So now above this high, what's retail traders going to think inside of this? They're going to see this as a bull flag. That's not a bull flag. You're inside of what? That higher time frame PD array. You're not looking for price here to be bullish. You're looking at this as your first stage Cairo, and then this inversion here. Why this one and not these? Because this is where the CE of that daily SIBI is. So you have the real second stage Cairo. Seeing if there's a volume imbalance there. Right here. Trades into it here, works lower, trades back up, and then begins to work lower. This is a accumulation over that high. Accumulation above highs and lows, buy side and sell side, is order pairing. This is where smart money is accumulating short positions here. And then what happens? Sells off going into the end of the day. So it's a very simple idea. It's not something that's overly complicated, but what you're going to have to deal with is trying to create a framework, trying to get that entry perfected here, here. Why not that long? Why that long? Why does this fail here, run lower, and then this works here? All right, but I was right. I was right on the direction at least. Yeah, you can be right on the direction, but your entire time is wrong. That's the most important part, is not just the direction, but getting the direction with a certain time. So after price works here, I'm taking this liquidity pool here and working it out. Relative equal lows left during Asia, extend it out. Getting rid of the lipstick. Everything from here to here, you can also look at that as order pairing. All of those digs. Buy, 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 buy. Offload positions here. offset distribution, and then runs lower. So pretty simple day, nothing really overly complicated. The key aspect is inside of your backtesting to remember what time each entry is coming from. Where can you enter? What did you do? What did you expect to happen? What actually happened? And what should you have done? The 4 questions. From there to there. 261 and 167. 261-ish. Right down there. From new week opening gap. That's all you need. So now you're expecting high resistant liquidity run conditions. You're anticipating price to not give a massive continuation all the way up to this buy side yet. Maybe later in the week, but today is not the day. So you shouldn't be looking for something big. You should be looking for your low-hanging fruit objective and being done with that. How do you play intraday liquidity? If you don't have a model to play intraday liquidity, then you shouldn't even be considering to be trading this market on a Monday like this, of everything that we just went over. That doesn't make any sense to do. So, pretty simple day. Pretty easy day, especially that move there is really nice. But I promised you guys I'd get the video out. Made up for the previous 3 or 4 times of not doing it. So, with that said, be safe.